Good morning, everybody. Mike Vacchi, Princetontrader.com, here with your Friday market webcast. Okay, so the futures have rolled into the December contract. You can see that we continue to just march. Once we got through the 50-day, we consolidated a little bit. We couldn't even pull back to the 9-day moving average here. And Wednesday was a big move up. Yesterday was more of Globex had the move. Yesterday was about the market just whipping itself out on a lot of news. So for our part, we had a very good Globex. We punched out of some very big runners from 92 up and around 20 handles. And then basically we were in a nice short that got whipped out on news. We were in a nice long that got whipped out on news. And it just, these big moves on this tariff stuff. We have a current risk marker at 30.10. I'm flat right now. I was totally out of pocket last night, so I didn't trade it. But overnight, it came back in. Let's go to the hourly chart. Overnight, it came in, did 3,008, little gap up at the open to like 12, and then it really hasn't come back. It's just a bleed higher. Everybody hates this rally. I mean, you go on Twitter for 5 seconds, and everybody hates this rally. Everybody's, when are we pulling back? When are we pulling back? And as long as that happens, the weak-handed shorts are going to continue to get these little mini squeezes out of this rally, and we're going to continue to march to the upside. So with the move from the September futures contract into the December futures contract, that gives us a new all-time high to aim at. That's up at 30.3225. So basically, just 6.5 handles from the high print, a half an hour ago, right around 7 o'clock. I will be curious to see, number one, if the bulls can continue to press their advantage. And remember what we've talked about. Why do they have this advantage? They have this advantage because they couldn't deal with the weekly pivot early in the week. This was the best they could do. And you get directional days to the upside. The inverse works as well. I mean, if they weren't able to turn it into, if resistance held, we saw that the tail end of last year, a little bit this year. But typically it happens with the bulls. They'll make a run at the weekly pivot early in the week, and if they're unsuccessful, all these dips are buys. All these dips are buys. So off the open, volume weighted average price is at 1931. The hourly mid band is there at on the December contract. It's at 1834, proprietary moving average at 21. So this 1819 to 21 area is going to be important. And if they just want to, buy it and run away, the last 2 days we have bought at like 9:31 in the morning, which is not my favorite thing to do. I hate putting setups out right after the bell, but it's worked in that they try to go ahead and take this thing higher. If the bears are going to win today, if they're going to push back today, in and through 16 is what they have to convert. They have to deal with the Globex low, which is down at 12, and kind of push back from there. That makes the Sunday open a little more interesting because it'll help close the gap with respect to the new weekly pivot, which I would suspect, if the bears can have a day, and I mean a big, and not a gigantic day, but just a solid red day, they might be able to bring that weekly pivot right up to around where we open on Sunday. And if they're able to do that, and they're able to kind of flip the field on the bulls, meaning if they can somehow get that weekly pivot over the tops of everybody's head, then they can at least make the argument Sunday, Monday into Tuesday morning of attempting to make the weekly pivot resistance. If that can happen, they can progress back a little bit on the downside and try to walk a little bit of this back. I mean, I'm not saying it can do much. The 9-day is down at 29.78. Does that typically get a look in situations like this? Yeah. Do we have to print the all-time high before it goes down and does that? Maybe. But what I do know is that if the shorts continue to be really weak hands, and they've been really weak hands, then you are going to see that all-time high, and you're just going to see this continued hated bleed to the upside. My suggestion to all of you then is to buy dips until it stops working. That's what we've been doing because it works. You know, we want to do what works now. And trying to pick every high in a market doesn't work. We don't do that. You will find it might be hard to buy highs, but typically in tapes like this, it'll pay you. And the more you do it, the more you get used to it. It doesn't work all the time. Nothing works all the time. That's why they call it trading and not handle harvesting. But for me, until the bears can convert through 16 and hold it below, there's not a whole hell of a lot to short in this market, at least on the S&P Futures. All right. Have a great day. Have a great weekend. Come check out the room. Trade them well. And I'll talk to you guys on Monday. Follow us over on Twitter, Instagram, and Snapchat at Princetontrader. Check us out on Facebook and join us for a free trial at www.princetontrader.com. Trade them well.